Most people think you need a massive inheritance or a six-figure salary to become a millionaire. They look at the stock market like it's a high-stakes casino reserved for the elite. But I'm here to tell you that's the biggest lie in the financial world. The truth is, the math doesn't care about your background, and compound interest doesn't ask for your resume. You can start building a $1,000,000 empire with just $100. Yes, the same $100 you might spend on a weekend dinner or a pair of sneakers. The secret isn't in how much you start with, but in the systems you build around that first step. Think of your $100 as a single seed. If you eat the seed, it's gone. But if you plant it, water it, and give it time, it turns into a tree that drops thousands of seeds of its own. Today, we're going to talk about the exact blueprint to turn that $100 seed into a $1,000,000 forest. We're moving past the get-rich-quick schemes and diving into the get-wealthy-for-sure strategy. First, let's talk about the psychological barrier. When you have a small amount of money, it's easy to feel like it doesn't matter. You think, what's an extra $5 in a savings account going to do? This is where most people fail before they even begin. In the world of finance, consistency is the ultimate superpower. It beats timing the market, it beats luck, and sometimes it even beats raw talent. Starting with $100 isn't about the amount, it's about the habit. You are training your brain to see yourself as an investor rather than a consumer. To make this work, we have to look at the power of the Lollapalooza effect. This is when several small forces move in the same direction to create a massive result. If you invest $100 today and never touch it again at a 7% annual return, it won't make you a millionaire in your lifetime. But that's not what we're doing. We're using that $100 as the foundation of a recurring system. Let's run the numbers, because numbers don't have emotions. If you start with $100 and commit to adding just $50 a week, that's less than the price of most daily coffee habits or a couple of streaming subscriptions, and you achieve an average 10% annual return, which is the historical average of the S&P 500, you are looking at over $700,000 in 30 years. Give it a few more years or bump that weekly contribution slightly as your income grows, and you're crossing the $1,000,000 finish line. The first pillar of this strategy is the low-cost index revolution. In the old days, you needed a broker and high fees to buy stocks. Today, you can buy a piece of the 500 largest companies in America with the click of a button. When you buy an index fund, you aren't betting on one company to succeed. You're betting on the entire American economy. You're owning Apple, Microsoft, Amazon, and Google all at once. If one company fails, the others are there to pick up the slack. This is how you achieve diversified, long-term growth without needing a PhD in finance. But how do you find that extra money to keep the engine running? It's not about deprivation, it's about optimization. We often suffer from lifestyle creep. As soon as we earn more, we spend more. The trick to building a $1,000,000 portfolio is to keep your expenses stagnant while your income rises. Every raise, every bonus, every side hustle dollar should be directed straight into your portfolio. Now that we understand the power of the index, we need to talk about the second pillar, tax-advantaged fortresses. If you're investing in a standard brokerage account, Uncle Sam is going to take a bite out of your growth every single year. But when you're starting with a small amount, you need every penny to work for you. This is where accounts like the Roth IRA become your best friend. In a Roth IRA, you contribute money that has already been taxed, but then it grows completely tax-free. When you hit retirement age and pull out that $1,000,000, you keep every single cent. Imagine the difference between having $1,000,000 and having $700,000 after taxes. That's the power of choosing the right bucket for your seeds. The third pillar is automated discipline. Human beings are hardwired to make terrible financial decisions. When the market drops, our instinct is to run and sell. When the market is booming, we want to buy at the top because of FOMO. To reach that $1,000,000 goal, you must remove yourself from the equation. Set up an automatic transfer from your bank account to your investment account the day you get paid. If you never see the money in your checking account, you won't miss it. This is called paying yourself first, and it is the single most common trait among self-made millionaires.
You aren't investing what's left after spending, you are spending what's left after investing. As your portfolio grows from that initial $100 to $10,000, then $50,000, you will hit what I call the velocity point. This is the moment where your money starts making more money in a day than you do at your job. This is when the math gets exciting. When you have a $500,000 portfolio, a simple 2% market gain earns you $10,000 in a single week. That is the reward for the years of discipline and the courage to start small. But getting there requires you to ignore the noise. The news will tell you the world is ending every other week. Your friends will brag about a meme coin that went to the moon. Ignore it all. The million-dollar portfolio is built on boring, consistent wins, not lucky gambles. Let's address the biggest hurdle: time. Many people watch this and think, 30 years is too long, I want it now. But the time is going to pass anyway. You can either spend the next 30 decades wondering where your money went, or you can spend them watching your empire grow. Even if you start late, the principles remain the same. If you can't increase the time, you must increase the contribution. Every extra $20 you find by cutting a subscription or selling old clothes is a turbo boost for your financial engine. The journey from $100 to $1 million isn't about the bank balance, it's about the person you become in the process. You become someone who values the future over a fleeting moment of retail therapy. You become someone who understands the mechanics of the world, and most importantly, you become free. Financial freedom isn't about buying Ferraris, it's about the peace of mind that comes from knowing you are no longer a slave to a paycheck. So here is your challenge for today. Don't just watch this video and move on to the next one. Take that $100, open a low-cost brokerage account, pick a total market index fund, and plant your first seed. The best time to plant a tree was 20 years ago. The second best time is right now. Your future self is waiting for you at the finish line, and they are thanking you for having the courage to start today with just $100. Let's get to work.